Hello and welcome to my Chapter 3 video. Chapter 3 is going to be focused on the customer area in QuickBooks, which we can find here on our home page. By now you've become familiar with navigating around and getting into the different areas QuickBooks provides. For Chapter 3, again, we're going to be focused on customers. Last chapter in Chapter 2, we were focused on vendors. So today what we're going to do is we're going to switch sides. We're going to talk about customers and accounts receivable. Okay. What's nice is that QuickBooks, once a customer has been established, meaning once that a customer has been set up in the system, QuickBooks lets us do all of our accounts receivable activities, such as creating an invoice for a customer. And if you look here just on the home screen, here's the Create Invoice button. And then where do we go from there? Once we make the invoice, meaning someone owes us money, we use accounts receivable, we're going to receive the payment. And then that goes against what the bill basically that you've sent to your customer. And then what happens? Then you're going to deposit the money into your bank. So it's a system of where, again, we use the accounts receivable area to help us record the invoices, receive the money, and then record deposits. We also have an area where we are going to do sales receipts. Now notice the sales receipts, that is for an instant payment. That's where you bill your customer and get the payment at the same time, meaning cash in your hand. That means that we're totally bypassing the invoicing system. We're not going to send the customer an invoice and receive the payment. Notice that the sales receipt area starts after the received payment. So with sales receipt, it's super easy. You're just going to record the payment, record the sales receipt, and then record the deposit into your bank account. For example, my mom has a very small salon. It's just herself. It's her own business. She's semi-retired. You know, when you go in to get your hair done, you're not going to get an invoice, meaning, oh, you have 30 days to pay. No, no, no. When you get your hair done or any type of service, yeah, it's a sales receipt. Here's the bill. You pay it. And then boom, it goes right into recording deposits. So as you go along and you record all these transactions, if you go into the customer center, and let's pick on a customer here, this burger bakery. I'm going to enlarge my screen here and go to all transactions. Let's say all the transactions ever. But here we go. Here's some records that have already been entered of, for example, an invoice, which was invoiced on the 23rd for $1,200, and then a payment that was received. And you can actually go right in and double click on that invoice, and it will show that it was actually paid in part. Meaning, if you look at this, you can see, hey, this customer still owes me $600. If you look at their balance total here, you can see who owes you money, who's paid up. Obviously the zeros, they don't owe you money, but anyone with the balance, you can stay in touch with those. So let's go back to the customer center, and basically the customer center serves as the accounts receivable subsidiary ledger. What does that mean? That means that in your customer center, that includes all companies and individuals whom the company sells goods and services to. And this includes all of their information, such as their name, address, contact, credit limit, etc. So if we click on Burger Bakery here and we look at their information, you can see their name, the company, the contact, their phone number, their email address, which is super awesome because then you can just email them their invoice. And then under payment settings, this is where you can put in their account number, what their typical payment terms are. You know, maybe it's a customer that you want the net to be 10 days. They've been a slow payer. Or maybe right now you're allowing them a $10,000 credit limit. Hey, maybe there's some financial difficulties going on with this bakery and you're like, you know what, they're not paying me. We're having some difficulties, so you should set their credit limit. Maybe you want to cut that down in half. And then there's some other options in here. There's credit card information, which you would obviously use in the real world. There's also an area for this online payment. That is an additional add-on, and it has a fee that you would pay so that your customer could pay you online. Super quick, super awesome, but again, not free. So for class purposes, we're going to bypass that. There's also sales tax settings, which you can get into. Additional information, you know, is this a commercial or a residential customer? We've got a couple different types for our interior design company, and then some job information, which we'll get into later in the text. So basically, that's what goes on here in the customer information area. If you want to add in a new customer, you just click new, and then you could add in, you know, Karen's Cupcakes. If there was an opening balance, and again, very similar to vendors, if there was an opening balance that they owed you, this is where you would put that in. You then put in their name, their title, etc., payment settings, and all that you'd want to set up. Okay. If you ever have to go back into a customer and they're a customer that you're not really working with anymore, again, instead of deleting them, you would just want to make them inactive, meaning that they wouldn't show on your list, but you could still bring them back for viewing purposes. So let's go through how to enter an invoice in QuickBooks. But first, I want to talk about the concept behind what's happening behind the scenes with these forms, because QuickBooks is automatically entering in the invoice. When you do the form, it's putting in the journal entry for that, and then it's also doing the entry for received payments and deposit. Let's go through a little bit of review of those. So this is in your book as well, but as far as when you sell something on account, in our case, it's an interior design company, so we're selling, in this case, decorating services. That's our revenue. That's how we make our money. How are we putting this in the system? We're doing it through a form, which I'll show you here in a second. But what's happening behind the scenes? We've got a couple T accounts here. What's happening is that when you initiate and bill someone, you're going to debit accounts receivable, which is an asset account, and then you're going to credit your revenue account, which is your decorating services. And then what happens is once that is entered, okay, then you'll move forward, which I'll show you here in a minute, and then receive the money and then apply it to the account. So first we're going to start off with just doing the sale on account. And how we do that is, for example, we'll go in here to create invoice, and I'm going to go to new, and I'm going to choose who it is. So let's just pretend it's this Franco Films. Watch your dates, put in the invoice number as far as what the book says. Choose your terms. So if there is a discount term, and when you do the payment, the discount doesn't show up, it's because you didn't choose the right term, okay? So let's pretend it's just decorating services here, and we're going to put in 2 hours at $50, and so you can see then it's $100. So I'm going to save and close that, okay? And then if we run our journal, I'm going to go up here and run our journal, and I'm going to do all, okay? And if we go all the way down here to the bottom, we're going to see that Franco Films, and let's look at the detail here of the accounts that are used. You can see that we are debiting accounts receivable, and we are crediting decorating services, which is, again, that revenue account. So that, in a nutshell, is how you enter in an invoice. All right, so now let's talk about how to then receive the payment. So I entered the bill for Franco. Now we're going to receive the payment, but again, before I do that, let's do a little bit of review. So remember that when we first did the invoice that we debited accounts receivable and credited the revenue account, our design services, decorating services. But now what we're going to do is we're going to receive the money. So what happens? When we receive the payment, accounts receivable goes down because they made the payment. So before it was debited, now we're going to credit the accounts receivable, and then we're going to debit what is called undeposited funds. And in accounting class, you probably learned, well, we're going to debit cash. Well, here's the deal. Because we haven't made the deposit yet at the bank, it's going to sit in the undeposited fund until we do so. And that's just a way of keeping track of money that we've collected, and then we'll deposit at a later time. Most businesses, small businesses, do not make deposit every single day. They'll do it once a week, once or twice a week. So until the money's actually physically deposited at the bank, it will sit in that undeposited funds account, okay? So now let's go in and we're going to receive the payment. And to do that, we're going to go to Receive Payments, and we're going to go in and we're going to choose Franco Films. And you can see right here is that bill, okay? I'm just going to close that. You can see the bill for $100, and actually you can see that there's also an invoice for $14.40. But for now, I'm just going to pay this one. I'm going to click on that we paid it. Now, what if I decided that I only wanted to make a partial payment? This is where you would do that. The only field that I can change in here is this partial payment. So right here, I can say, you know what, I only want to pay $50, okay? And then you can see that I would change that to 50, and it says, hey, this is an underpayment. Do you want to leave it as an underpayment, or do you want to write it off? We're not going to write off $50. Sometimes if it's a few cents off, yes, in the real world you would write it off. But in this case, we would just leave it as an underpayment. But yeah, just to keep it simple, it's $100. That's how much we're paying the bill for. Make sure the payment up there is $100. What if there was a discount? Remember that when we entered in the invoice, that was the time that we would have put in a discount. The nice thing is you can always override the discount and then choose the discount account. But bottom line is it's always very easy to modify and change if needed. You can always go back. So we've recorded the payment. We're going to click on Save and Close. Okay. All right. The next thing I want to talk about is how to record the depositing of the money. Remember that it was sitting in that undeposited funds account. So when we actually physically go to the bank and we make our deposit, that's when the money that we collected from our customers in undeposited funds is going to go to the bank. So what does that mean? That means that we're going to debit cash, okay, that's going up, and then we're going to credit undeposited funds. And if we go back into QuickBooks in here, if I go into record deposits, I'm going to go up here and you can see that $100 right here. I'm going to click the box, click on OK, and then I'm going to tell QuickBooks the date, which cash account, you may have multiple, and then click on Save and Close, okay? And then going back, let's go up and let's look at my journal again, and let's look at those transactions. So down here was my invoice, which I first started with, and you can see accounts receivable as a debit, and then the decorating services, which we talked about. And then when I do the payment, what's happening? I'm going to debit undeposited funds, not cash, because why? We haven't made the deposit yet. We haven't physically gotten in our car and gone to the bank, okay? And then we're going to credit accounts receivable. Notice we don't touch revenue. The revenue was already earned, right, when we made the bill, okay? And then when we actually make the deposit at the bank, we're going to debit cash. And then what happens to undeposited funds? We're going to clear that out. That's just a clearing. That's just a holding account. We're going to credit that. So there's no balance then in undeposited funds. Last thing we need to talk about is the reports that are available to us in the customer area. I've already brought up the journal, which is always our friend, especially when you're trying to find mistakes. If you go to up to reports and then you go down and we're going to go to customers, again, very similar to vendors, except for we're on the opposite side of the transaction. Now we're receiving money, not paying money. So under customers, this is where we can look at our, for example, our aging detail, and then you can put in the dates that are requested in your book, and then you can see, basically who owes you money, what the due dates are. Other reports that are important under customers are going to be your customer balance detail, and this shows you a breakdown of, okay, here is Franco Films. You can see here was an invoice. There was the payment that I made, but remember there was that other invoice for $14.40. There was a partial payment, so there is still a balance due. And what's nice is you can use this quick zoom feature. If you watch my cursor, you can go right back into that invoice and look at the details, so that's really cool. Another important report in here is going to be your, let's look at your open invoices, and that's going to show you all invoices that are out there and ready to be paid or you need to collect upon. You may have to call your customers and kind of check up and see what the deal is there. And then lastly, there's also the customer contact list, similar to the vendor contact list, but these are your customers. And again, what's nice is if you need to go in and update information, you can just quick zoom it and update it. So very, very, very cool features. Last thing I'll just mention is the biggest pitfall of this chapter is that you have to understand when you're actually doing an invoice or when you're receiving immediate payment. Whenever you have a cash sale, it's going to be a sale where it has the word immediately in there. And whenever you see that, you know that that would be a sales receipt. Okay? If you see the words, net 30 days, that will be create invoice. What sometimes throws students off is that you'll still see an invoice number even for the sales receipts. We still have to keep track of those, obviously. We have to give them a number. But when it's an immediate payment, sales receipt, when you're going to give them net 30 days, net 60 days, whatever it may be, that's going to be create invoices. So that's chapter 3. Thanks.